Namo Venkatesaya. Am I audible, sir?
Yes, sir.
Very good. Esteemed Chairman of the three branches, Kakinada branch, Sri Gangarangaru, Rajamandri, K. Satyaraj Garu, and Mr. Godavari V. Rev Kumar, Ravi Kiran, and Regional Council member, my good friend, Muppad Subbarao Garu, and branch committee members, executive members, and managing committee members, and then past illustrious chairman who kept intact the professional zeal to continue the professional learning, and which culminated into today's program. As noted by our Uppal Subbarao Garu in the opening remarks, the public religious and public charitable trusts taxation, though appears to be easy, after claiming the exemption and filing the return, huge demands are resulting into. The huge demands means I am dealing with some trusts where 200 crores and above demand is raised. 50 crores, 100 crores, 3 crores, 5 crores. In 2018, when we invited the CPC Directorate, Total Managing Committee, the Directorate from Bangalore to Tirupati in one face-to-face conference, they themselves said the charitable trust demands, thousands of crores demands are outstanding. They gave some reasons also. So the importance of the charitable trust taxation has increased in the past 5 years. Maybe the financial year immediately completed, financial year 21-22, has seen substantial change. The first evidence of substantial change is no question of permanent registration. Everyone has to get fresh registration. So 2021 April to 22 March 31st, the window was kept open for a re-registration of all the existing 12 AA registrations who are eligible and have been continuing Section 11 exemption to have a fresh re-registration under the new 12AB, 12 capital A, capital B section. It was made almost simple, the registration. The registration is made valid for 5 years. They have given one unique code. So that registration, when you apply in Form 10A, they have given in Form 10AC. The code we have to use for all the subsequent years return filing and the correspondence. The new registration is two types. Those who are already having the registration, just like a renewal, the registration. Those who are not having also were given a provisional registration for 3 years, and with a rider that they should obtain the permanent registration by filing form. Permanent means another 5 years. So again, Form 10AB. For that also, majority would have availed the benefit and have got the registration. Normally, they are giving 18 conditions along with the registration. They say that the registration is not automatically entitling you to get the exemption of Section 11. The registration must be followed with the satisfaction of these conditions. 18 conditions they have given. In the Income Tax Act also, the conditions given at the time of registration shall be satisfied year on year. So the public religious institutions, public charitable institutions must have the registration in order to claim the registration. This is chapter that is section 11, 12, 13 is a separate chapter. It is a code by itself. Once a public trust, a non-profit motive public trust is coming in this code, its income shall be computed as per this only, not as per the 5 heads of income. In addition to this 11, 12, 13, chapter 3 code, 1023C is also there. The 2021 Finance Act and now the 2022 Finance Act read together. Almost there is no difference between section 11 exemption and 1023C exemption. Section 11 exemption is with a registration under 12AB, whereas 1023C is an approval under 1023C. Both the same 10A form, only in the filling up that form in row 2, the code number, if you use separately, you will get it. If you are earlier having 1023C, even now you can have 1023C continuation. The conditions to be satisfied in both the cases are similar. The amendments in 2022 Finance Act especially made both the routes equal. The specialities, the conditions are being modified in 21 Finance Act, 22 Finance Act, which have got a lot of bearing. That only we are going to see today. I want to share my PPT. How to, so here share is there, share the screen, okay? Yes. Are you able to see?
Yes, sir.
Yes, sir. Yes, sir.
Now slideshow, are you able to see?
Yes, sir. Yes, sir.
Yes, sir.
Okay. So I will be showing you the changes. When we are dealing with these charitable institutions, filing the audit report 1 month before the due date of filing of the return. As per the Act, normally October 31st is the due date for filing of the return. And for filing the audit report, September 30th is the. In the case of a business entity, tax audit, even if you are not filing the tax audit report 1 month before, and normally along with the return of income, if you are filing, either within the due date or within the financial year, maximum they can levy the penalty for not completing the audit and filing the report for a business entity. For a charitable entity, for a public religious entity, if once the audit report is not filed, you are not entitled to section 11 exemption or 1023C exemption. They are not saying some penalty, some fine, nothing. Exemption you will lose. Like that for 2021-22, many of our colleagues, just like tax audit, this is also okay. 1 month before the due date, not able to, along with the return of income, as on the last day, let us file. They have all received from CPC the notice. Why can't section 11 exemption be forfeited? Your income is taxable. What do you want to say? So, fortunately, the Central Board of Directors has given some circulars saying if there is a delay in filing the audit report, the jurisdictional commissioner can condone the delay. So, under section 119(2)(b), a petition has to be filed before the Commissioner of Exemptions, Hyderabad. Then he will call for the report, and if it is a reasonable cause for delay, he will condone the delay. That delay condonation you have to file to the CPC. Then the CPC will give you the exemption. Otherwise, it is fully taxable. The second important condition, the return filing before the due date. If the return is not filed before the due date, Section 11 exemption is not available. Unfortunately, if the return is not filed, though it is a procedure, if the return is not filed before the due date, CBTD has not given any power for the commissioner to condone the delay. They have not filed within the time they returned. Okay. That return filing delay is very fatal. So one has to file the return. Okay. Then the accounts and audit. Without audit report, you cannot get this. For the limit is there. If the gross receipts exceeding the basic exemption 2,50,000 are there, the trust must get its accounts audited. When I'm using the word trust in section 11, 12, and 13, they have also used the word either the trust or institution. The trust words includes any legal obligation. Section 13(10) explanation. Section 13, subsection 10 explanation. Say trust includes any other legal obligation. So the legal obligation, it can be a society, it can be a trust, or it can be a Section 8 company. So if it is a limited company, Companies Act Schedule 3 has given the format of accounts, though it is a non-profit motive, public, charitable, limited company, its accounts must be as per the Companies Act. Whereas the other entities like society and trust must maintain the accounts and must get the audit. Only in 2022 Finance Act, 2 new amendments are made with regard to accounts. Maintenance of accounts is compulsory. If accounts are not maintained, you are not entitled to Section 11 exemption, and income has to be computed only with revenue receipts minus revenue expenditure. The net income is taxable only in 2022 finance. What about the earlier years? All these earlier years we have been issuing for the past 20-30 years Form 10B in respect of 12A registration and 10BB in respect of 1023C approvals. So all these is also when we are issuing the report, first part and second part. For example, 10B, the first part, what we used to say, the institution has maintained the books of accounts and the financial statements are drawn as per those accounts. We verified them. We got the information to draw an opinion which is true and fair in respect of the balance sheet as on date and for the income and expenditure account or profit and loss account for the year ending as on that. So all these is also books of accounts are there to conduct the audit, but technically because of some court traditions, the amendment has to be made. So books maintenance earlier also is compulsory, now also is compulsory. Earlier, because audit is compulsory, to get the audit without books, no question of audit, a chartered accountant cannot. What I want to say, for the society trust under the respective acts, maintenance of books of accounts and getting the audit report is compulsory or not, keep it aside. To get the exemption under Section 11 or say 1023C, audit is a must. And audit is a must means books maintenance is also a must. Now, failure of it, definitely the exemption is lost. And the income will be computed in a peculiar way, which we are going to see. Earlier, how the income has to be computed when the exemption is lost under the 5 heads, income has to be computed was the decision earlier. Now, because of these technical procedural lapses, if non-compliance is noticed, only in 2022 Finance Act, specified violation, a definition is given in 12AB 4 and specified income and one new tax levying 115 BBI, a new section of tax 30% prescribing 115 BBI is for a specified situation. What is the 30% attraction for these charitable institutions? Specified income is there, and one new penalty section also only for these charitable institutions is introduced for the first time, that we are going to see. So the ICAI on last month, June 2nd, has issued a technical guide